You were listening to chartingwealth.com for Monday, the 11th of December, 2017. What do we see going on in these markets? Oh, and by the way, take out your weekly market worksheet. Start filling it out as we go through this broadcast. This is the weekly market worksheet day. Rest of the days of the week are the daily market worksheet. Those are available to everybody who subscribes at chartingwealth.com for free. There are PDFs there if you want to supercharge your trading and make what you're listening to really worthwhile and create your own trader's diary. This is how you do it. Now, let's jump into the charts. S&P 500 up 0.54% for the day. The Q's up 0.45%. Bonds down just barely 0.01%. Gold flat. Okay, let's look at what happened throughout the course of the week with our weekly candle. Our weekly candle is fully drawn now that it's Friday. It's the fifth day of the fifth day. So it's a 5-day candle, a weekly. It is finished being drawn, and we're into our third week of up movement on the S&P 500 since the pullback on the week ending the 17th. Derivative oscillators gained a little bit of speed, and the price percent oscillator is moving up nicely. What do we see going on the 2-day chart? Of course, it crossed over going up back on the 29th. And has continued to moved up for 6 days, then pulled back a little bit for the 2-day candle ending the 7th, and then the first day of the latest 2-day candle is an up move, not as strong as those three prior green candles, but still an up move so far, just the first day of the latest 2-day candle. Let's take a look at the 4-hour chart. What do we see? Remember, we had the pullback and we're waiting for it to cross back over going up so that we can jump into an S&P 500 trade. Why? Because the 2-day chart's in a confirmed up move, as is the weekly. We waited for a pullback. That is where the 4-hour chart moves in the opposite direction of the two larger charts. It's what we call a pullback. And then when it crosses back over with enough energy on the 4-hour chart moving up, that's your jumping in point. That might happen on Monday, did not happen on Friday. So keep an eye on that. Mark that down in your notes for the opening next week. And keep an eye on that 4-hour chart Monday morning and Monday afternoon. Maybe we'll have an entry point. Okay, that's where we are at the end of the week and what we'll be looking for in the S&P 500 over the course of the next week. What about the Qs? That's QQQ, the Nasdaq 100. It had gone up, what is that, 8 weeks, and then started moving down over the course of the week ending Friday, the 1st of December, and we have a doji pretty much at the end of this current week ending the 8th of December. What does a doji mean? It means indecision tending down. Now, because of the move up over the course of the day on Friday, that made this more of a doji than a red down candle. It does have a long wick on the bottom, not as long a wick on the top. The 2-day chart, well, and again, we see derivative oscillator losing energy. We thought we might have a crossover going down on the price percent oscillator. Did not happen. Looked very much like it would happen at the beginning of the week, but it pulled back with some up movement. So let's take a look at the 2-day chart. What do we see there? Well, the 2-day chart actually crossed over going down back on the 1st of December, and really 8 days, 4 candles of down movement. This latest day, though, was a pop-up, actually pushed through the 2-day trend line. It's just the first day of the latest 2-day candle, but an interesting move. And again, didn't cross back over going up. So again, we have the schizophrenia between the 2-day chart moving down, the weekly chart moving up. That means we don't have a trade on the Qs until things work their way out. What do we have going on the 4-hour chart? Well, it did cross over moving up. So we'll just keep an eye on things and see how things establish, whether there's going to be enough down movement to pull the weekly chart over with the 2-day, or if this up movement's going to continue, is going to pull the 2-day chart back over in the direction of the weekly. We shall just wait and see. Don't have a trade at this time on QQQ, the Nasdaq 100. Let's go to TLT as we hit about the 4-minute 30 mark in our review. We try to keep it at 10 minutes for you. Sometimes I get a little long-winded. I apologize. What do we see going on the 20-year bond? Well, remember we had that weekly vertical crossover going up back on last Friday, the 1st of December. Had a jumping in point at the beginning of the week, and we have a green up candle. Now, and again, derivative oscillators growing nicely, price percent oscillators continuing to move up. That's on the weekly chart. What do we see on the 2-day? It's gone flat over the last 3 days or so. Up movement over the course of the 2-day chart. It up movement over the course of the 2-day chart ending Tuesday the 5th and ending Thursday the 7th. It was Friday where there was some down movement. Again, it's been flat on the price percent oscillator, derivative oscillators losing energy. And again, when we look at what happened on Friday, up just barely 0.01%. Let's delve a little deeper into that, see what's going on. Had a crossover going down in the morning on Friday, and then we had a bit of a push up later in the day on Friday afternoon. Derivative oscillators flipped over going down, and the price percent oscillators going down on that 4-hour chart. How do you handle that? Well, when the crossover occurred, you sure could have pulled the plug and gotten yourself out. However, at the end of the day, we don't have a crossover going down on any of the big charts, nor do we have a penetration of our 2-day trend line or our weekly trend line. Got awfully close, but ended up above that. So continue to keep your eye on TLT. If you wish to pull the plug and wait for the 4-hour chart to rotate back over going up, you can sure do that. The appropriate point to do that is once you have the crossover going down confirmed, you wait for the next candle to open, and that would have gotten you out at somewhere at about 126.95. And again, we had that weekly vertical crossover and a jumping in point somewhere at about 126.26. So again, we hope to make more than 50 cents on a trade. It did go as high as 128.23. And again, don't forget, weekly vertical crossovers typically have standing. Means there may be some pullbacks and all, but they continue to move for weeks. Doesn't have to, doesn't always. But again, we continue to trust our weekly vertical crossovers because they work time and time and time again. Okay, let's continue to, again, evaluate that, watch it, practice, trade it. Remember, we're not a stock calling service. We're not in any way, in fact, we're discouraging you from using real money. We want you to go to any of the online brokers, open a virtual trading account, use your trade worksheet, and practice these trades time and time and time again until you get so good you can do it in your sleep. Then and only then can you decide with all the other knowledge you have if indeed you want to start spending real money in the market. Lastly, we go to gold, and we're on the weekly chart there. Gold down big for the week. Gold crossed over going down all the way back on the 6th of October. Slid sideways a little bit, but really pounded down over the course of this last week. Derivative oscillator heading down strongly. Price percent oscillator kinked over like a hockey stick, moving down. If we look at the 2-day chart, what do we see? Well, we have 4 strong down candles again. That's not 8 days yet. It's actually 7 days, 3 full candles, and then the first day of the latest. But strong down movement, 2-day crossover going down back on the 5th. And then what about our 4-hour chart? It's just continuing to be sort of beautiful, isn't it? It crossed over going down all the way back on the 29th of November, and it has continued to move down, sideways a little bit, but again, tending down, down, down. Now, how far will it go? Well, it's got some space to move on down. Maybe somewhere around, the lowest point that we've seen in a while is around 115. So again, keep your eye on things on gold. 4-hour chart has started working again, but remember, it typically stops working around the 15th of December, and that's coming up awfully quick. Usually starts working again rather nicely around the 15th or so of January, but it's looking quite beautiful now. And of course, all things being equal, the market does tend to move in the direction of the largest chart, and that is the weekly, and that is sure what's happening. Folks, that's where we are at the end of the week. Just about out of time. Man, I am keeping this to 10 minutes. We love to hear from you. CW at Charting Wealth. God bless, all the best from the entire team here at Charting Wealth World Headquarters.